Okay, let's unpack this. Imagine like a side hustle that sounds almost too good to be true, maybe. You leverage something you already have your good credit to potentially earn hundreds, maybe even thousands of dollars a month.
Yeah, it's one of those things you hear whispers about online, right? Sometimes a bit controversial.
Definitely something you might not fully get. And that's exactly what we're diving into today. We're taking your source material, this stack of articles and research, and really trying to cut through the noise around selling trade lines.
Exactly. What is this whole thing?
Right. So first off, what is a trade line? Simply put, it's just an account that shows up on your credit report. You know, like a credit card, maybe a mortgage, a car loan.
For standard stuff?
Yeah. And the core idea behind selling them is this thing called piggybacking.
Yes, piggybacking. So it's where someone with established good credit history adds another person as an authorized user to one of their existing credit accounts, almost always a credit card, like you said. And that second person, the authorized user, then essentially gets to, well, piggyback on the positive history of that account. It shows up on their credit report.
Gotcha. And our mission for this deep dive, using your sources here as our guide, is to really understand this. Is selling access to your good credit like this, a savvy move for extra cash?
Or is it just a really risky gamble with potentially huge downside?
Or maybe something else entirely?
Yeah.
What do these articles and research actually find? How does it work? What can you really earn? And critically, what are the hidden dangers, the things you need to be aware of?
It's fascinating, isn't it? How simple the basic idea sounds, but then how quickly the complexities and the risks just seem to multiply.
Totally. So let's just make sure that core concept is super clear. Tradelines accounts on your report. Piggybacking equals someone as an authorized user, an AU, to your credit card. What's in it for that AU? Why do they want this?
Well, the benefit for the AU is that your good payment history, the age of your account, maybe your high credit limit, all that stuff, can start showing up on their credit report.
Yeah.
And this can potentially give their credit score a boost, mostly by helping their credit utilization ratio, because your high limit makes their total available credit look bigger, and also by lengthening their average credit history artificially through your older account.
Right.
And the sources point out this has really become like a kind of cottage industry. You've got brokers acting as middlemen now.
A cottage industry built on, someone else's good financial habits. Okay, so that's the concept. How does this selling trade lines thing actually play out in practice, according to the sources? What's the typical process?
Usually it starts with you having a pretty decent credit card, one you've had for a while, always paid on time, maybe it's got a high limit.
Okay.
Then a broker or a company that specializes in this connects you with buyers, people who are actively looking to improve their credit profile.
And then you add these buyers as authorized users to your card, but just for a limited time.
Exactly. The sources often mention 30 to 90 days. It's temporary.
Okay.
And here's a really crucial detail the sources kept highlighting. The buyer does not get a physical card.
Oh, good.
Yeah, and they definitely don't get access to your actual credit account to, spend money. Their only connection is that your positive history reports on their file because they're listed as an AU.
And then after the time's up, you just remove them.
You remove them. And for doing that adding and then removing them, you get paid a fee by the broker.
So, okay, the appeal for the seller is clear. You get potential passive income just by using your good credit, and the buyer gets a potential score bump.
And that idea of easy money is definitely the big draw, isn't it? Which, leads us right to the earnings question. What did the sources say someone could actually make doing this?
Yeah, the money part is appealing. Some reports mentioned in the sources suggested sellers might earn $1,000 or more per month. But that's usually if they have multiple cards they can use or multiple AU spots they can fill consistently.
Right. It's not guaranteed. And the amount you earn per spot, per authorized user, it varies quite a bit. Depends heavily on the card itself.
How so?
Well, an older card, one with a really long positive history, that's generally worth more.
Makes sense.
And a card with a higher credit limit is also more attractive, so it can command a higher fee. And of course, your own credit score needs to be excellent. The sources usually said 700 plus minimum to even be considered valuable for this.
So what's a typical payout? Did they give a range?
Yeah, the sources generally put the range somewhere between, say, $50 and maybe $350 per authorized user for the time they're on the account.
Per month or?
Usually per cycle, so maybe every couple months they're on there. And one article broke down a potential scenario, like if you had 2 cards and you could sell 2 AU spots on each, and you were getting maybe $250 per spot every couple of months, you could potentially earn around $3,000 per year from each card if you could keep those spots filled all the time.
Big if.
Huge if. It's really important to see those as like upper estimates. Your actual income is going to depend a lot on demand, whether your specific cards are what buyers want, and honestly, how good and reliable your broker is.
Okay, so the potential money is there, maybe. But this is where the sources really started hammering on the significant risks involved. And they really stress that these risks are often seriously underestimated. Let's unpack those.
Yeah, this is absolutely the most critical part. You have to understand this side. One of the biggest risks they highlighted is account closure by the bank.
Account closure, just like that. Why would my bank close my card?
Because banks are actively looking for what they call authorized user abuse. They see it as trying to game their system. And one specific trigger point mentioned in the material is adding too many AUs to one card.
How many is too many?
The number cited was often around 4 to 6 authorized users. If you go over that, it can flag your account for review.
And if you get flagged?
The sources were pretty blunt. If a bank thinks you're selling AU spots, permanent closure of that account is quite likely.
Wow.
And they might just do it, sometimes with very little warning.
Okay, that's scary. And what does losing, say, my oldest credit card do to my own credit score?
Oh, it can hurt it significantly. Losing an old established card reduces your average account age. That's a factor in your score.
Right.
And it also lowers your total available credit, which means your credit utilization ratio probably goes up. That's another key scoring factor. So yeah, double whammy.
So you could actually wreck the good credit you were trying to make money from.
Mm.
Okay. What's another major risk the sources talked about?
Violating your actual credit card agreement. The terms and conditions.
The fine print nobody reads.
Exactly, but the sources point out that most card agreements explicitly say you cannot sell access or transfer your account privileges. They even quoted Discover's terms as an example. You may not sell, assign, or transfer your account without first obtaining our prior written consent.
Which you're obviously not getting if you're selling spots through a broker.
Right. So getting caught isn't just about maybe getting the account closed. You're potentially breaching a legal contract you have with the bank.
And the consequences of that?
Well, besides account closure, it could potentially get you blacklisted by that specific bank, meaning, good luck getting another card or loan from them in the future.
Yikes. Okay, the sources also mentioned legal and ethical gray areas. Is selling trade lines actually, legal?
So, according to the research we looked at, there isn't a specific federal or state law right now that explicitly says you cannot sell an authorized user spot. Not yet, anything.
Okay, so technically not illegal.
But, and this is a huge but, the sources strongly emphasize that banks universally prohibit it in their terms, and they view it very negatively. Depending on how it's used, they might even see it as misrepresentation or potentially fraud.
How could it tip over into actual fraud?
The legal danger the sources describe really kicks in if someone uses that artificially boosted score, the one they got from your trade line, to qualify for a big loan.
Like a mortgage.
Exactly. A mortgage, a car loan, a large personal loan, something they wouldn't have qualified for based on their own actual credit history. That specific act of using the inflated score to get the loan, that could potentially be prosecuted as loan application fraud.
Whoa. So even if selling the spot itself is maybe in a gray zone, the way the buyer uses that boosted score could have serious legal fallout, and maybe splash back on you.
That's the complex picture the sources paint, and it ties right into the ethical debate they raise too. Are you really helping someone, or are you just enabling a practice that lenders see as deceptive? You might be helping someone get credit they can't actually afford to handle long term, which could lead them into default down the road. Is that really helping? It's a tough question.
Definitely something to chew on. What about data security? You're basically adding strangers to your account, even if it's through a broker.
Yeah, this is a big one. To add someone as an AU, you have to give sensitive personal info to the broker, full name, date of birth, sometimes even their social security number. And that info gets shared.
That feels risky.
It is. And what's the absolute worst case scenario if somehow that authorized user did manage to get their hands on a physical card connected to your account, or just the number?
They could go on a shopping spree.
Yeah.
On my dime.
They could make unauthorized purchases, absolutely. And ultimately, you, as the primary account holder, are generally liable for those charges, at least initially while you fight it.
Oh, man.
Now, Brokers claim they prevent this. They say all mail goes to you, they control things, but the sources explicitly state there's still a residual risk. A chance something could go wrong and the card or number gets misused.
A residual risk that sounds like a massive headache, potentially. And just to circle back, the direct impact on your credit score again, besides the account closure risk.
Right, we touched on it, but it's worth hammering home. If your account gets shut down because the bank flagged you, that directly hits your score, lowers your average account age, shrinks your available credit.
Right.
And this is super important if you are thinking about applying for a major loan yourself anytime soon. Buying a house, getting a car, doing this trade line selling could seriously mess up your own chances of getting approved or at least getting good rates.
It really drives home that contradiction, doesn't it? Trying to leverage your good credit could be the very thing that tanks it. Okay, let's switch gears a little. Practical stuff. The sources covered brokers, time commitment, taxes.
Yeah, okay. So the sources were really clear. If you're even considering this, picking a reputable broker is absolutely critical. Cannot stress that enough.
Why so critical?
Because you're trusting them with incredibly sensitive information, yours and the buyer's. Personal details, financial account connections. You need someone trustworthy.
Did the sources name any specific brokers as examples?
They did mention a couple. Tradeline Supply Company came up described as being pretty transparent, user-friendly, with decent reviews apparently. Boost Credit 101 was another one mentioned, noted for having a structured process.
But the main advice was,
do your homework. Research any broker's reputation thoroughly before you even think about signing up. Check reviews, look for complaints, understand their process.
Makes sense. What about the time involved? It's often sold as easy money, right? Is it really zero effort?
The sources suggest the actual act of adding or removing an AU is pretty quick, like minutes online or maybe a short phone call to the bank. And the broker is supposed to handle the heavy lifting, finding the buyers, collecting payments, telling you when to do a remove. But you still need to be organized. Keep track of who's on which card, when they need to come off, and you have to be responsive to the broker. So it's minimal effort, maybe, but not zero.
Got it. And taxes.
Yeah.
That income you get, is it taxable?
Oh, absolutely, 100%. The sources are crystal clear on this. Income from selling trade lines is taxable income.
So you got to report it.
Yep. If you earn over $600 from a single broker in a year, they're likely required by law to send you a 1099 form, probably a 1099 MISC or 1099 NEC, and they send a copy to the IRS too.
So the IRS knows you got paid. And could it be seen as like self-employment income?
It potentially could, yes, which might mean you'd owe self-employment taxes, Social Security, and Medicare on top of regular income tax. Yeah. The strong advice from the sources. Talk to a tax professional. Understand exactly how this income affects your specific tax situation before you start.
Good advice. Okay. Let's just briefly, let's touch on the other side, the buyer's view.
Yeah.
And the industry status. Why are buyers paying for this again?
Buyers are usually looking for a fairly quick fix, a way to boost their credit score fast, hoping it helps them qualify for a loan, maybe get better interest rates, or just get approved for something they need, like an apartment.
And what's the risk for them?
Well, the score boost might be only temporary. Lenders are getting smarter. They might see this sudden jump from an authorized user account and just disregard it.
Oh, so it might not even work.
It might not. Or they could still get denied for the loan anyway. Plus, there's the cost they paid for the trade line itself.
Right. And the industry overall, is it booming, shrinking? What's the status?
The sources described it as definitely a booming area. There's high demand for, well, credit building shortcuts, and maybe a lack of good financial education fuels some of it too. But it's also under scrutiny. That phrase came up. Banks, regulators, they're paying more attention. They're reportedly stepping up their efforts to monitor accounts and enforce the rules against this.
So the party might not last forever.
Could be. Which brings us right back to the big question the sources wrestle with. You weigh all this up. Is selling trade lines actually worth it?
And the conclusion from the material seemed to be maybe, but only under very specific circumstances.
Pretty much. It can be lucrative, the sources concede, if, and these are big ifs, you have truly excellent credit already, and you have a really high tolerance for taking on significant risks.
Yeah, it's definitely not painted as some casual side gig you just jump into.
No way. The potential for your account getting closed, the hit to your own score, the murky legal ground, the ethical questions, it all requires really serious thought and consideration.
What was the advice if someone, despite all that, still wanted to try it? Did the sources offer any, harm reduction tips?
They did list a few key recommendations, like number 1, Only work with reputable brokers you've vetted intensely.
Yeah.
Number 2, strictly limit how many cards you use for this and how many AUs you add. Don't go crazy.
Keep it small scale.
Yeah. Number 3, avoid using your absolute best cards for this, like your oldest one, or the one with the highest limit that's crucial for your own score. Protect your most important assets.
What else?
Keep meticulous records for tax purposes and just to track everything. And finally, stay informed. Keep an eye on your credit card issuer's policies about authorized users because they can change.
But the absolute final word, the main takeaway from the research seemed to be
that your own long-term financial health is paramount. Protecting your credit score, your good standing with banks, your reputation, that should always come first, way before the lure of potentially easy money.
Wow. Okay, so this deep dive into your source material has really pulled back the curtain on selling trade lines. It shows this practice that kind of exists in this weird, complex, legal and ethical space. It offers potential financial gain. Yeah, absolutely. But it comes packaged with these very real, potentially quite severe risks to your own financial future.
It's a really stark illustration, isn't it? That tension between looking for a shortcut versus the, tried and true path of just building credit slowly and responsibly over time.
Definitely. So here's maybe a final thought for you, the listener, to chew on, based only on what we've dug into from these sources today.
Yeah.
Given the banks seem to be actively trying harder to find and shut down accounts doing this, and considering all the risks we laid out for the seller, like damaging your own score, and for the buyer, like potential legal issues depending on how they use that credit boost, does that possibility of short-term income really justify potentially messing up your own long-term financial health? Or, getting involved in something that lenders pretty clearly see as deceptive?
That's the multi-$1,000 question, isn't it? Something definitely worth thinking long and hard about.